Hey everybody, Boris, Forex. Welcome to the commodity dollar update for May 28th to June 1 for 2018 for Aussie dollar, dollar CAD, and Kiwi dollar. And this week really focuses our attention on dollar CAD because we have the Bank of Canada rate decision on Wednesday. That's the central seminal event risk in the COM dollar land. We also have a little bit of RBNZ news with the RBNZ monetary statement and just a very, very quiet week on the Aussie front as we go forward. So COM dollar is pretty much staying at the levels they stayed last week, with the exception of dollar CAD, which is really going to be the central story this week. So Aussie dollar still holding at 74 support, still resisting at the 76 resist level. Dollar CAD, however, has really moved up. There's been a couple of interesting stories on dollar CAD that have really weakened loonie against the dollar. One, we have still a lot of turbulence around NAFTA negotiations, a lot of turbulence around China negotiations. It's sort of interesting how the U.S.-China conflict now is being conflated with U.S.-Canada conflict on trade, because the idea here is that if the U.S. is going to battle everybody on trade, they're going to battle Canada as well. And we're still very much far away from coming to any kind of a guaranteed agreement on NAFTA, which is continuously a sore spot weighing on loonie because of it. But the really big reason why loonie took a hit this week was because oil crumbled. It gave up the 70 handle, came down all the way down to 67 in today's trade because both Saudi Arabia and Russia said they're going to ease their restrictions. They're going to start pumping more oil into the marketplace. And that clearly broke the back of the market, which was very, very overheated, obviously drove dollar CAD down. Next week, however, the really big event the market is going to be watching is the Bank of Canada rate decision. Nobody's expecting a rate hike, but the big thing that everybody will be watching for is whether the BOC is dovish or hawkish. Now, prior to this, they've generally been tilting hawkish, talking up the strength of the Canadian economy and the need for normalization of monetary policy. But over the last few meetings, they've gotten a lot more dovish in their assessment, and I think they're going to stay very dovish now because the data out of Canada has been problematic. And the problem is it isn't even so much the data out of Canada, it's the massive uncertainty around the trade barrier issues that's just hampering Bank of Canada. And at this point, I think their attitude is better safe than sorry. We'll stay on the sidelines for the time being. If they communicate that message, it really creates a lot of momentum for us to break the 130 towards the 131 level. We'll take a look at the charts in just 1 second. And then last but not least, the Kiwi story is one of consolidation, one of holding bid around 69 after just getting decimated over the last several weeks on very, very dovish RBNZ statement. And we still have, beginning of this week, we had commentary saying from RBNZ essentially kind of hinting that they were denying the idea that they were going to go to a rate hike, rate cut. But the fact that they were talking about a rate cut versus a rate hike suggests that their whole focus right now is on easing rather than tightening, and that they will entertain the idea of further easing because they still have obviously yield in their play, which is not positive for the Kiwi. So this week's RBNZ statement, it'll be interesting to see if they kind of reassess their balance of risks as we go forward. Let's take a look at the calendar here, see what's going on over there. So on the calendar side, not much in the COM dollar land, as you can see. It's really just Canadian current account balance. Then we have the BOC, and then followed by the Canadian GDP after the Bank of Canada. So of course, Bank of Canada is probably going to have an early read on the GDP, and it could inform their statement afterwards. And then we also, the only data set that we have from COM dollar land is the Australian manufacturing PMI, and we're mildly bullish that because business confidence was a little bit better. So that's sort of it on the economic front. It's really Canada front and center that we're going to be watching. Let's take a look at the charts here and just see how those set up. Oops, sorry, wrong charts. Here we go. How those set up on the dailies and the weeklies. So what's interesting about the Canada chart, which is I think the primary chart to look at here, is the weekly is very bullish. We're ending on the highs of the week. We are challenging this critical 130 level. But if you look at this, and this is a daily chart, right? So if we look at the weekly chart, the weekly chart is really bullish because it's essentially a hammer formation, and this 30 is the absolute Maginot line. We break that, it really pushes us very hard through 130, perhaps even towards the 132. There's not much here to keep us back. If you look at the weekly charts, just from a formation point of view, also very bullish dollar CAD, higher lows, all continuously making nice spikes. This is going to be, of course, the big battle, right? So we'll see next week if we can break through the 130. It really opens up the passageway towards the 131, 132. Of course, everything is going to be contingent on Bank of Canada. Bank of Canada could surprise everybody and become super hawkish, and then we could have a massive reversal. But assuming that they're going to stay true to the course, there is very strong potential here, given the momentum in the chart, of us going to 131, 131.50 before the end of next week, and that probably is going to be the trade that we're going to be looking at as a trade of the week next week. Now, Aussie dollar. Just very, very quiet. One of the more boring trades that you can find here, just really tight within the 76, 74 basis. Nothing much to move it. And it had a little bit of a rally this week because prices and commodity prices have really rallied. But now with commodity prices maybe giving back a little bit of their gains, we could see a decline back down towards the 75 level. For now, super quiet, nothing much going on. What's more interesting here is whether Kiwi is going to hold bid. The Kiwi has been much weaker than Aussie, but it finally stabilized at around the 68.50 level. So here we are, again, another very low volatility trade, but a higher low here. If you sort of assume this is the low that holds 68.51, that is a higher low than the 67.89 low that we made here. That means we have a reasonable chance here of some consolidation, perhaps a peak back up towards the 70s. Even on a rebalancing basis, just sort of Aussie-Kiwi basis, Kiwi should begin to outperform unless we get super dovish commentary from the RBNZ quarterly review. So watching that very carefully, that's going to be the big tell front of the week. But middle of the week and towards the end of the week on the commodity dollar land, it's going to be all caddy all the way. And that trade has 130 written all over it. Wish you guys the best luck, the best of trading. Boris Schlossberg, over and out.